Hello, everyone, and welcome back for part two of the August monthly market update. And as we left off with part one, in part two, I want to talk about, in the series is entitled Certain and Uncertainty, or Facts versus Fear. And what I want to provide you here is just some facts and the difference between deceleration of appreciation and home prices depreciating, which is what everybody's fear is, home prices depreciating. We're going to take a look at what actually happened factually with house prices in 2022, which is in fact a deceleration of appreciation. But to start out, I want to start off with this chart here and show you the 48-year average monthly price movement. So as we talked about in part one, everything has a season, especially in real estate. In summer sports, activities, everything just kind of fluctuates. Gas prices, when to buy a car, when not to buy a car at the end of the market, all those things. So real estate has the same thing. And we're looking at this chart here, the 48-year average of monthly price movement. You can see that historically, over the last 48 years, we start off slow in January, February, coming out of the Christmas season, winter, across the nation, and some states, not as much here in Virginia. And then it starts upticking in March, and then hits its peak in May and starts declining. The prices start declining a little bit. These are all appreciation, but the appreciation declines, not the depreciation of the house prices. So that I want to start with that chart, and then we're going to come back to that chart a couple times as well to kind of show you what I'm talking about here. What I want to show you is what, like I said when we started, is what we did in 2022 and what threw off all the experts and the economists and started coming out with some of those articles that were really starting to scare people. And here you can see in 2022, in the black is that 48-year average that we talked about, and in the orange is what we did in 2022. So you can see in January, February, when it's historically 0.1 and 0.3% on the appreciation of houses, I mean, we off the charts, especially in March of last year, was at the highest point where appreciation was just off the charts. So what has to happen in any market when we're doing that? The end of the year, there had to be a correction to it. We couldn't continue to go at that pace, and everybody knew that. So in the second half, it did just that. Houses weren't depreciating. The appreciation had to decelerate to correct the market. And that's what we did starting in July of last year. And we carried it on to January, February of this year as well. And what this chart shows you right here is what we look like in 2023. So the 2023 through May of this year, you can see we were a little bit below in January and February. Like I said, it was that deceleration of appreciation. We didn't depreciate house values, but the deceleration of appreciation lasted up into March. And then it hit its seasonal trend, like it normally does over the last 48 years, at a more realistic pace, not the unrealistic pace that we had in 2022 that skyrocketed house prices. Also, what happened in the middle of in June timeframe of last year is individuals, they were paying top dollar for the house, but they were also in interest rates in the upper 4s and lower 5s. So it wasn't a bad deal for them because now we're sitting in the upper 6s, right? So the challenge last year is we had a historically high first half of the year. And the last slide I wanted to show you, and then we decrease in the second half of the year, excuse me. But I want to show you that in a couple snapshots. Look at what these experts, I got 6 experts here that that showed you factually, this is what's already happened with house prices. And you can see it starting in January of last year up through May of this year. We had that downtick, that deceleration of appreciation, and then we were getting back in to the normal market. Now I will tell you, so that there is Case-Shiller, FHFA, CoreLogic, and then 3 more, Zillow, Black Knight, and Freddie Mac. So each one of them are different sources, so they're just a little bit different in numbers, but you can see, again, in July of last year until February this year, we did have a deceleration, some deceleration of appreciation to kind of right-size the market. So if you're watching the news nationwide, I want to leave you with this chart on this series. And over the last 3 years in the 20 major cities, you can see that the national average in appreciation of houses is 41.8%. You may say, Jeremy, I live in Phoenix, or I know somebody that lives in Phoenix, and they're in a rough market right now, and they've been rough and they've been negative all year long. As of May of this year, they're at negative 0.01. So that is different than other markets, absolutely. But the 3-year average for Phoenix is still 54.2%. Look at Tampa, 63.8% in the last 3 years. So I tell you that to show you that, yes, we look at nation numbers, and still over the last 3 years, home buying is still a great idea. There's appreciation in it. There's not depreciation. It's not a depreciating asset like when you buy a car. It is absolutely appreciating. And we had a little downtick again because we had to decelerate that appreciation because it was getting a little out of hand. So hopefully that helps you out. We'll lead off with part 3, and we're going to talk about why I can confidently say prices are not going to plummet.